Hello everyone, this is Alan Donald with Keller Williams in Charleston, South Carolina. If you've been reading national real estate headlines, you might think the market is struggling. But here in Charleston, the story was very different. Today, I'm going to share with you what happened in 2025 in our local market, what implications those things have for buyers and sellers, and what we expect in 2026. The real estate market in Charleston was pretty stable in terms of the number of homes sold. As you can see, we sold 1.7% more homes in 2025 than in 2024. That level of homes sold is still below the number of homes sold in the normal years of 2016 to 2019. The median home price went up 2.4% to $426,947. This is overall, includes single-family detached and single-family attached homes. But the story is different if you look at it separately. Median price for single-family detached home increased by 3.5%, while the prices for townhouses and condos decreased by 1.4%. The median sales price trend line is still above the compound growth trend line of 4.6%. In 2025, our inventory at the end of the year was 4,489 homes, up 8.9% compared to 2024. So our inventory is increasing. However, this curve, which shows the demand and supply, shows that inventory, which is the red curve, it's still below the inventory we have in pre-pandemic years. Homes are staying a little longer on the market. In 2025, the average days on market was 50, up 25% compared to 2024. The average days on market for single-family detached was 48, and townhouses and condos lasted a little bit longer at 54. Month supply is the relationship between supply and demand. This is what moves prices up or down. We considered a market of 4 to 6 months supply a balanced or stable market. Right now in Charleston, we're slightly above 3 months supply. So it's still undersupplied, still slightly seller's market. New construction has a lower number of months supply, which means that builders are not building as many spec homes. On average, homes are achieving 96% of the original list price, down by 0.5% from what they achieved in 2024. So market is softening a little bit. 53.2% of homes had to have a price reduction to attract an offer, and this varies by price point. On average, the price reduction taken for those homes who reduced their price was 6%. Again, it varies by price point. Price reductions had a dramatic effect on the sold over original list price. Overall, homes that had to reduce their price sold for 92% of the original list price. Homes that did not have a price reduction sold for 100% of the original list price. It also had a very dramatic effect on days on market. The median days on market for homes that did not have a price reduction was 7 days, while the median days on market of homes that had to have a price reduction was 94 days. Again, this varies by price point. So the real story is that out of 3,027 closings in quarter 4 of 2025, 46.8% of those didn't have a price reduction. And those that were not previously listed sold for 100% of the original list price in 6 days as a median. If they had been previously listed, sold for 98.7%, but they took 129 days to sell. Those that have to have price reductions sold for 92% of the original list price in 94 days. But if they had previously listed, it took them 155 days to sell for 89.6% of the original list price. For every 100 closings, 33 of those failed, likely due to overpricing. 67 sold, with 36 of those having to reduce their price before selling. Only 31 out of those 100 were correctly priced.
So what are the implications for sellers? It is essential to price your home correctly from the start. Comparable sales from a year ago are no longer relevant. You must look at active competitors to price correctly. Time is not on your side once you list a home. Homes are like bread, they get stale soon. Price reductions need to be swift and decisive, and expect buyers to ask for concessions. What are the implications for buyers? If a home is priced right, it's likely going to sell quickly and perhaps even attract multiple offers. If a home has been on the market for a while and just reduced its price, there's a good chance that you might be able to get a larger discount or additional concessions. So based on what happened in 2025, what do we expect in 2026? We expect similar sales to 2025 in terms of number of homes sold, stable to slightly lower mortgage rates, especially because this is an election year, 2 to 4% median home price appreciation, keeping up with inflation, and inventory going back to pre-pandemic levels in the 5,000 to 6,000 range.
I hope this information was useful for you. If you're thinking of buying, selling, or investing in real estate in the Charleston area, or if you need a realtor anywhere else, please contact us on 843-900-0155. This is Alan, and until the next one.